You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MyAx, one of the fastest, most efficient trading platforms in the world. MyAx is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, Spike, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at myaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back. It is time to dance once again in the vol market. It is time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the network upon which so many of you are binging new people, new faces, new air holes all the time here on the network. That's why it's so important for you folks out there, if you're listening on demand in particular on one of the major platforms. If you like what you hear, if you're enjoying it, all we ask is that you go out there and give it a rating and review. We've been doing this for a long time. We have a lot of ratings, a lot of reviews, but the newer ones, they tend to weight those strongly in the store, and it also helps the new folks who are just discovering the show for the first time. When they see those in there, it gives them a little bit more confidence when they hit the listen or subscribe button. And of course, if you want to go above and beyond, if you want to join us live throughout the week, get exclusive shows, participate in giveaways, all the other fun stuff that we do for you cool folks, because we like you, theoptionsinsider.com/secret club is the place to go. I'm going to bankrupt myself shipping all these things to you cool folks in the secret club. But hey, I like you folks, so it's worth it. And of course, however you listen, live after the fact, do keep those questions, those comments, those insights, those pearls of wisdom coming. Especially now, we all know these are crazy markets we're all living through together. So what you're seeing, what you're trading, how you view these crazy markets, it's always interesting to us here. So keep sending those in. We do love to hear from you here on the show. Let's see who we're hearing from on the show today, holding down the MyAx hot seat this week. Our old friend, 2 weeks in a row now, doing double duty, the rockingest of lobsters, a.k.a. the most diehard of New England cynics, a.k.a. the angry alter ego to the mild-mannered vol man, none other than Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show. And did you bring your superhero alter ego with you today?
I did. We did bring Vol Man is here. And of course, as always, chirpy, except he doesn't talk, but he is here. So you're looking at the vol landscape for the viewers and for the listeners. I guess there's just listeners. There's no viewers. Lucky for them. They don't have to look at two old guys. I guess you're not old. You're not really.
That's
you're
speak for yourself, sir. You were market making when I was like in diapers, so I don't want to hear about this madness. So you were making, well, I think it was like the Stone Age, the early Jurassic, when you first began making them markets, sir. I was but a young pup, a wee whippersnapper in those days.
You were still you were still on your daddy's knee looking at wrestling.
I was like, what are these derivatives, Dad? What does that mean? Could I possibly build a future around these products? And lo and behold, it lured me to the dark side as we lure you right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do just that. We break down the week that was and indeed still is from many different perspectives, including from the Vol trading and trending and analysis and unusual activity. And man, we've all done a lot of Vol living over the course of the past 48 hours, listeners, because, of course, just a couple of nights ago now, it seems like longer than that. A couple of nights ago, of course, we saw the moment many people have been fearing over there in Ukraine actually pop off. We had the tanks start rolling into Ukraine. The invasion was on, and overnight it seemed like the markets are really going to get pounded. And then, of course, coming into the option block yesterday, it seemed like that pounding was lessening, and by the end of the show, NASDAQ had turned green. Of course, by the end of the day, the other major indices would pretty much wipe out most of those losses as well. And then coming into today, of course, we are off to the races yet again. There are some talks that perhaps there are talks in the offing, Moscow at least offering to have talks. That's an interesting strategy. You come in, you just launch a bunch of missiles, send the tanks, knock out a bunch of air defense, and then you say, okay, now I'm willing to talk after I've bloodied you up quite a bit. So interesting. We'll see if Ukraine takes them up on this or not. I got a feeling they're going to be a little bit more strident. They don't seem like they really want to kowtow to what Putin is offering. But again, we'll see. We shall see. We shall see. Time will tell. Or I should say, fortunately, the dire scenario that the Rock Lobster was predicting yesterday of China sending some ships across over there to Taiwan, thankfully, that did not come to pass. So even speaking that into the ether is a dangerous thing in these insane post-pandemic days where quite literally anything could happen in these markets. But thankfully, that did not. All that a long way around to saying, coming into the start of the show, we have the Dow up about 2%. So pretty much the polar opposite of what it was when we kicked off the option block yesterday when it was down 2%. We have the S&P up 1.6% and the NASDAQ up about 0.75% or so, a little bit less than that. Looking at our chat now, looks like all you're talking about the vol fade. Yeah, if you guys were in on that vol fade, you were looking pretty good. I do believe our boy Luigi was talking about scooping some VIX puts. So maybe he's off spending that money right now because he's looking pretty good right now because we are looking back down again on the vol indices. When we kicked off the show, we had spikes at about a 27.75. That puts it down about exactly 2 points from where it was this time last week. VIX cash about a 27 even when we kicked off the show. Puts it down about 2.25 points. Remember this time last week, listeners, we were ratcheting up in the other direction. We had our special guest star, a.k.a. Mr. Loggins, a guy we all love, but we don't really want him on the show because when he's on the show, that means bad things are usually in the offing. So he's not on the show today, even though technically he could be because we are still north of that 25 level. But we're trending in the anti-Loggins direction. So down about 2.25 points on VIX. We shall see as this erosion continues. We probably will be lower as the show goes on. VVIX coming back down a whopping 18.5 handles from where it was this time last week when we kicked off the show. Was at about a 119. That puts it down, I said 18, almost 19 handles, 18.5 points from this time. So vol a lot less frothy than it was this time last week. Let's go out to the Viking as well, a.k.a. the V-Spikes. Remember, your easiest place to probably find this still is over there at Simon's site, T3index.com. They have a bunch of stuff there. They have BitVol, so they have their version, which is the Bitcoin VIX. They have their version of the SKU index, and they, of course, have V-Spikes. And V-Spikes at about a 161.5 coming into showtime. Puts it down 10 points from where it was this time last week. Remember, the range on that so far we've seen only launched in pretty much November. Got about a 206 on the upside. That was on December 3rd, right in the height of the Omicron madness. And the low, almost hit it again on January 24th. And then the low for the year was at about 128 and change back on November 4th. So it's had quite the range. We're kind of right in the middle of that range right now. By the way, speaking of Simon and all things V-Spikes, he put out an interesting video with our buddy, Mr. Tom Jark, this week. You can find it over there at myaxoptions.com/spikes, talking about why he thinks V-Spikes is superior to VVIX and all the other different methods of vol. But really, he's talking about VVIX. We know what he's talking about out there. He talks about how it's constructed using his simple variance swap methodology, which gives the calls and puts equal weight. So for him, that makes it the superior measure of vol. If you're curious about that, you want to hear what Tom and Simon have to say on the issue of the Viking versus V-Spikes, you know where to go, myxoptions.com/spikes. All right, Mr. Rock Lobster / Volman. That's a lot of table setting. I really laid a nice plate, a nice table for you, sir. Feel free to dig in wherever you want.
Well, I have to say, Volman does take a little exception to your just shaking off, sloughing off, ignoring the fact that we are still in the danger zone.
You think we need a visit from our guest star?
Well, I will give you these reasons, and then you can decide yourself. Because I'm not going to.
You don't need to twist my arm to get some logins going. You know, I could do that at the drop of a hat, and I kind of like it. I could do it when the VIX is 9. I could throw some logins on. You don't need to twist my arm.
You don't need. So what I would say is, from a curve point, we're still like 28 volatility is still nothing to sneeze at. Number one. So we're still up in that upper level. The market has gapped up, basically just run up almost 2% today, 1.7%. VIX traded as low as 2672 or so, and then it's popped back up again. There's that. And the futures curve is still backward. So while it's not as bad as it could be, it is still far from settled. So I would not break out the champagne and celebrate, quite yet. Yes, yeah, if you bought some puts, I think you did okay. I'm running a couple of puts here that are looking pretty good, but we have not quite. So I will say though, VXX as a product, right, basically hit the level where we were Monday morning or Tuesday morning, right? Because today's Friday. Like we had a low in VXX right before everybody just got cold feet. A couple of days, everybody's like, okay, Putin's not going to do anything. And then there was a pretty serious market getting cold feet. And it happened again, literally right at that spot, like right around 22:59. So, and that was a Wednesday morning, right? Everything was kind of looking hunky-dory. Putin's really not going to do anything. Vol's going to go back down. And no, it did not happen. So what I would say is...
By the way, we have a surprise guest star. You twisted my arm, sir. He's back.
Yes.
I think you just want to get us kicked off YouTube again. I think that's what you want to do.
Well, you know what? I like it. You gotta play close to the edge. It's got to be dangerous.
All right, a little logins. You twisted my arm, sir. Again, doesn't take much. All right, continue as you bask in the joy, in the glory of our guest star.
As the best background music ever. Da, 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 da. So anyway, that is my rationale. So while it looks promising, we have not gotten out, which means still the liquidity providers are still looking at it. And I would say, listeners, hey, if you want to look at vol, the easiest way is look at the 30-day straddle. So yesterday, probably at peak vol, the 30-day straddle on SPX was $300, I would say, $300. So you buy one straddle, it's $30,000. Right now, where is that straddle? If I take a look now, where is that straddle? Let's see here. I'm going to go around to the March 25 cycle. Again, easiest way to do this. So that straddle now from peak to yesterday. Okay, and this was from yesterday morning, right? The current straddle is $225. So the SPX at the money straddle from yesterday morning, basically, and everybody's like, this guy is falling, $300. Right now, that straddle is $250, right? So, and that only gets us right to the level where we just were yesterday when everybody was freaking out. So what I would say I in order for that straddle to decrease marketably from here, we would need to see some pretty good news. Like the Fed's not really going to say anything until March, although I'm sure they're coming up with all kinds of excuses to kick the can because those bad old Russians are being bad again. But just for listeners to know, you had a $300 straddle, it's now $225. And that gets us to what? 4,200, a little less, 4,150. So I would say the straddle is probably fairly priced for the current expectations. So now I think expectations would have to change. So anyway, there you go. That's the Vol Man's his take on what's going on. And for reference, at the height of the COVID-19, like those dark days when oil was going to zero and the world was ending and all that kind of stuff, I think I'm going to say, is it $500 or $600? I think the straddle was $600. The 30-day straddle for SPX was $600 at the bottom of COVID. It was either $500 or $600. I'll have to go back and check. And what's funny enough is SPX actually moved more than $600 from the bottom in 30 days. So, like, you look at this stuff, the liquidity providers are pretty good at this. It's their job. And right now we're looking at 225. So, and we bounced, $150 from yesterday, maybe almost $300 from the dead bottom. So again, if you want to look at sentiment, if you're looking at vol, a big part of VIX, although clearly it's not the only thing, but how the liquidity provider is pricing expected move for the next 30 days. So that's my little trick. And it works pretty good. You could also do that now we have weeklies. Pretty soon we're going to have daily options. So again, if you want to get in the groove of watching what the market can do, that is certainly a good way to do it. And so here, just looking at how it was priced yesterday at $300 again. So remember, it was a 30-day straddle yesterday at $300. And from peak to trough, we moved $200 in 24 hours. So they did a pretty good job of pricing that straddle. So anyway, that's, I think, where we are right now. And yeah, we're still in zone 3 or zone 4, still in the danger zone, not out of it yet. But, hey, I'm a hopeful guy. I don't have to be grumpy all the time. It looks promising, and then we can go back to ruinous interest rates to wreck the rest of the market. So what the heck?
Here I was trying to set an optimistic tone at the start of the show, said we're trending in the right direction, but the Rock Lobster dragged us back into the danger zone. You can blame him, listeners, even though it is a glorious place to be, the danger zone here, as we await our takedown notice from YouTube and our letter from the Loggins estate lawyers. Let's go out to the skew index. Pretty much unched from where it was this time last week. Everyone loves that kind of meaningless once a day at close to close measure of skew, but it's at about 130.5. It's down about half a point from this time last week. So that tells you a whopping nothing out there in the land of skew. Instead, let's move on to the aforementioned futures. As Mr. Rock Lobster said, we are still backwards, still juicy, even though that front portion of the curve is a wee bit lower than it was this time last week. Coming into the start of the show, we had the March future was about almost 3/4 of a point, about 0.7 points lower than it was this time last week. April future down about exactly a half. Mr. Rock Lobster, we are still in that danger zone. We are still frothy. What's catching your eye out there in the volatility surface this week, sir?
Well, like I said, we got pretty solidly backward. So again, for listeners, if you want to look at some good indices to look at, I like the SIBO has some nice stuff. You got the VIX 9-day, 2677, with VIX cash 2770. So you're now starting to get the front end of 9-day vol versus 30-day vol bending lower. That is the start of contango. So again, while we're in the danger zone, you're not seeing the bid for the 9-day vol. Okay. The bid is certainly not there. You're starting to get into what I would call like at least the start of a normal contango. The rest of the surface is flattening up really, really well and very fast. So the variation from March to July is only about $1. So with VIX cash just north. So again, remember that is the futures are showing you the forward vol of the SPX options. And you're getting an idea of how the market is starting to look, at expectation. And right now, so the expectation is just today, just finally today, starting to trim a little bit. I think this morning 9-day VIX was like 29 and change, 29.50. So those numbers are coming down. And if they tank it, they might actually, you would think, hey, we got the Russians running around in Ukraine with tanks and planes and all kinds of bad stuff. You would think there would be a little bit more worry or bid for vol into the weekend. So I guess we'll deal with that in the crystal ball segment. But for right now, a little bit of the vol is coming off, I would say. So that's what the vol surface looks like to me. Also, the volatility products are still decaying upwards. So products like VXX and UVXY, they're still like a very 2-cent lift per day. And the negative products are actually like an SVXY, still got a little weight on them. So, it's not a lot as the curve flattens out. There's the daily grind on futures being bought and sold is flattening out. So again, it is still in the danger zone. It is not as dangerous. So maybe Maverick is flying around with, he's not flying around with 2 Sidewinder missiles today. He's just practicing in the danger zone. He's practicing. He's fighting with Viper. No live ammo.
Iceman was the Val Kilmer character.
That's right.
Iceman. Val Kilmer's best role? ? Yeah, he was pretty good. He was decent as Batman too, and I guess Jim Morrison is the Doors. He had a few. I haven't seen that documentary about how insane he is now. I'll have to go watch that. But yes, we all fondly remember him in perhaps the most homoerotic scene of the 1980s and maybe of all time, the volleyball scene in Top Gun out there. But I digress. Let's keep rolling on out here into Spike's options here. Let's go to actually some paperback. We've been talking for a while about, hey, when's this 4-way guy going to come back? He came back yesterday in Spikes. Remember last time he had on the Feb 26-22 put spread 500 times against the 30-40 call spread. That obviously expired, and now he has come back to partay once again. Maybe not given what markets we're seeing right now, maybe not the way you're thinking. He came in yesterday. So he sold the 26 puts for $1.87, bought the March 22 puts for 38 cents. Then he turned around and he bought the March 30s for $3.28, sold the March 40s for $1.52. So using the put spread to finance the upside, finance the vertical. I'm pretty sure that was the way he was leaning last time. So maybe for all of you out there who are thinking maybe we are outside of the danger zone, maybe thinking that vol is poised to come down between now and March expiration, at least this leg of this trade here saying perhaps not. He's looking at a 30-40 vertical and he's financing that with some puts in the mid-20s. So interesting stuff afoot. You guys like that spread? Would you rather do it the other way? How are you feeling right now? You think this is really just the calm before the storm? Or are you buying what the markets are telling us today that, hey, tanks be damned, missiles be damned, this is all over, this vol premium, this Putin premium was short-lived, only lasted a day or so, and not even a full day. It started reversing yesterday. So markets on the fade out there today. That means the top positions are going to be back to our four-way. We got the March 22-26 put spread versus the 30-40 call spread. We'll see how that plays out. That's interesting. Mr. Rock Lobster, does that surprise you that he would come back out and use the put spread to buy the call spread? Would you like it better the other way?
I don't know. That's a good question. I think the hardest. I'm looking at this. I'm trying to see if. So the way, my problem with, selling put spreads in the vol products is it's such a hard thing to sell in time. I find it better to buy the put spreads to pay for call spreads, to be honest. Just because of contango. So they're selling the 26, buying the 22 puts, it's an aggressive upside play. I get that part. But I'm just looking at how this is priced. Because the way you're kind of laying it out is like the guy bought the call spread and he sold the put spread against, right? And
that seems to be the way it went up.
Well, here's one of the things. This is the way I view trading this, if you want, which I think it works okay. If you want to be long, spike, right? Totally buy a call spread. And then don't do anything, right? Because you're either going to be right and spikes go up, or you're wrong and vol goes down. And vol is a reverting product. So, okay, down, 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 down. You can always pick your, when you want to sell a put spread, right? If you sell it right away, you're locked into that delta at the future and you're kind of stuck. So if vol does actually, hit like a 20, which is where we were, only a few weeks, I think 2 weeks ago, it feels like a month ago, but it was only, I think, a week or two ago. You just hung on that whole spread. So I prefer to do the opposite of just, buy a put spread, finance a call spread like that. Because if I'm right, the call spread generally makes so much money. Now you make a little less because you're long the put spread, but if you're going to do it at the same time, it's just a tougher trade. It's clearly you would want to be all in long, which is fine. If that's what you want to be. But it can be a tough trade trying to, like we just said, being in the danger zone and trying to ratchet up, not every battle is going to be with, who was it? The Syrians? I can't remember who that battle in the Mediterranean where Maverick got his brain back. I can't quite remember that one. Whoever the bad guys were, but unless when you're already in the danger zone, right? You're in zone 4. Unless you have more of the same activity, the vol will not stay up here. As much as I'm looking at 27.5, if this keeps up, it's going to be hard for it to stay this high. So I just find this a tougher trade, and I would prefer to do that put side much later in the game than right at the beginning, because I don't think it offers you anything to do it. There you go. That's my rationale.
Yeah, I'm definitely on board with that. I don't mind the vertical call spread at all. The put spread, I have a harder time rationalizing. Doing it right away, you're right, and doing it so aggressively. That's the part where I kind of hem and haw a little bit. That's why I wanted to see if you were on the same boat. What's the old saying? You can always tell a genius because he thinks just like you. And so there you go, Mr. Rock Lobster. You are now a certified genius.
Oh my gosh,
you are correct.
I'm still again trying to make sure that this is a dream. I've been called the genius on vol views by the grand poobah of the show. I got to make sure that I'm even in the right universe.
Luckily for you, it's being recorded, so it is there for all posterity. And again, as long as you agree with me, you are indeed in the genius ilk, sir. So let's roll on before you lose that status. Let's keep on rolling out here to the land of VIX. And you might be surprised, there's not a ton of VIX paper on the tape. It's decent, don't get me wrong. It's 293,000 contracts. That's almost what the ADV was not too long ago. That ADV, as we've talked about before, has come down quite a bit. I said it before, I will say it again. VIX ADV, it can't hang out north of 700K for too long. We were at 760, I believe, almost 750 or so this time last week. And yeah, even with all this madness, even with Putin rolling tanks this week, that ADV has come in 108,000 contracts from this time last week, listeners. So yeah, it's down to 643,000. Again, that's nothing to sneeze at. That's still a heck of a lot of paper. Most single name equity options would kill for that outside of, let's say, your Teslas and your Apples. But it's not a lot for VIX, at least compared to where it was a week ago. Let's look at the old top 10. Let's see what's open. What are the size positions right now in VIX options? And a lot of these are going to make you laugh, listeners. It is still 60-40 puts over calls. So puts still leading the dance, even after this past week. And the calls are, yes, they're those calls, listeners, the, shall we say, interesting ones. Number 10, cost you 120,000 contracts to break into the top 10 right now in VIX land. It gets you to the March 70s. Yeah, that's where we're going, listeners. The March 70s. If that's not intriguing, it's not engaging enough for you, allow me to propose number 9, 129,000 of the June 70s. got some 70 love going here. Number 8, $1.30 of the March 24 puts, our first of many puts in the top 10 here. Number 7, back to the calls, 131,000 of the May 35s. My goodness. Fully half of the other call strikes we're talking. That seems comparatively so reasonable, so level-headed. The May 35s. Number 6, also 131,000 of the June 19 puts. Number 5, $1.35 of the June 16 puts. Number 4, 146,000 of the March 20 puts. Number 3, our fourth and final call in the top 10 today, 150,000 almost exactly of the OX 75s. And this was part of that crazy kind of 1x5 we were talking about last week. Still open, still for size here on this OX 75 strike. Number 2, $1.50 as well of the June 18 puts. And rounding out the top 10 this week, not that big of a position for VIX, 156,000 of the June 22 puts. There are times when it costs you that much just to break into the top 10. But that's good enough for number 1. Back to the downside here. June 22 puts out here. Today, like we said, not a ton of paper on the tape, 293,000 contracts on the tape. The big dog today, the March 23 puts, I think given what we're seeing out there, not going to surprise you that we got a juicy put strip going today. Number 2, 32,000 of the March 24 puts. Number 3, 25,400 of the March 25 puts. Number 4, 15K of the April 20 puts. And rounding out the top 5 today, 13K of the March 26 puts. Moving on out to Thursday, 680,000 contracts on the tape this week. That gets you, let's see, is that the most, yeah, that is the most active day of the week so far, because obviously we were closed on Monday. 680 on Thursday, 34,600 for number 1 yesterday. That gets us to the March 40s. Remember, we had that kind of reversal yesterday, so we're probably going to see some puts and some calls lighting it up, and that's exactly what we're seeing here. Number 2, 33,500 of the April 22 puts. Number 3, about almost 30,000 of the April 28 calls. Number 4, 21,000 of the March 25 puts. And rounding out the top 5 yesterday, the intriguing March 50s, about 21,000 of those as well. 5 O's going up yesterday. Like those better than the 75s? What about the 35s? What is your preference out there in terms of crazy call strikes? Wednesday, 429,000 contracts. The big dog on Wednesday, 27,000 of the March 50s, 5 O's, followed by 19,000 of the April 28 calls. Number 3, 18, almost 19,000 of the March 22 puts. Number 4, about 16,000 of the weekly March 25 calls expiring on the 2nd, so next week. And then rounding out the top 5 on Wednesday, 15,000 of the March 23 puts. Tuesday, 437,000 contracts on the tape. So the second quietest day. Of course, today is not done, so may have a chance for today to be the quietest day going up here. But Tuesday, 437,000 contracts on the tape. About 30,500 of the March 22 puts was the big dog on Tuesday, followed by 24,000 of the March 28 calls. Number 3, 22,000 of the March 23 puts. Number 4, 20,000 of the July 20s. That's interesting. I'll dig into that one a little bit more. Going out a little bit, but the 20 strike, That's an intriguing strike. Certainly a lot more than the 50s or the 70s. And then rounding out the top 5 on Tuesday, March 32 halves, 19,000. I do want to go see what those July 20s went up for. Those are intriguing me. And of course, Monday, we were closed. Mr. Rock Lobster, what lit up your tape in kind of a weird back and forth week from a vol perspective? Anything catching your eye in the realm of VIX options as I dig up these July 20s, sir?
As you're digging, I do find it interesting that somebody buys about $1 jillion worth of Vega in October in VIX, and they don't close it. You find that odd?
Yeah, it seemed like they were set up that 1x5 just for, let's say, a Putin invasion, right? And then it happens, and you do nothing.
Yeah, I think that is like, for people that are trading VIX, if you want some kind of like long-term set it and forget it style hedge, the problem with the vol VIX is just the crazy backwardation. Those futures don't move that very much. Besides, a once a decade event or something, you're kind of really waiting a long time to get performance out of a trade like that. So like, I think all the action is in 30 days and in for VIX. If you really want, what I would call closable trades, if you want kind of some sleepy hedge thing that eventually might work, it really doesn't work until the future comes into the front anyway. So again, that's my 2 cents on this. But from a volume point of view, yeah, we're starting to see some more put buyers. And they're popping up. So you saw some here, but 18 puts, 22 puts, people thinking that we're going to get back into a more normal vol regime buying the June 18 put. So you're starting to see drips and drabs of that stuff, which I think we could get there, but we're not there until Biden declares, and that's what I have a feeling next week. Okay. This is total tinfoil hat, but Joe is going to come in next week and declare victory over COVID. I got to, there you go.
Mission accomplished banner on his head over the aircraft carrier.
Mission accomplished. Everybody, if you want, wear your mask, get your shots, do what you want to do, but we're done. We think it's over. So, and we'll see what happens. And maybe the Omicron helped inoculate 200 million Americans, which is probably at least what Bill Gates thinks. And usually what Bill Gates ends up thinking tends to be what happens 3 weeks later, as far as I can tell. So anyway, if he says the Omicron was a better inoculant than the actual vaccine, I'm going to believe that guy because he's super rich and he's usually right. So there you go. That could be the vol catalyst of all vol catalysts, at least short term. So anyway, I'm just saying it's random. I don't know why I think that, but with this Putin thing and like there's lots of noise, this would be a good time to do something like that. But it could be my worst prognostication ever, but I'm throwing it out there because this is the show to do it on.
Speaking of vol catalysts, this person is a bit of a vol catalyst because, we have talking Putin, we're talking Ukraine, talking COVID, all these things that are going on right now. And you know what's trending on Twitter right now as we speak, Mr. Rock Lobster? Morgan Fairchild, because why not? You're an old timer. I think that would probably resonate with you. She brought the sultry back in the day. I get nothing from you on Morgan Fairchild? Nothing. I thought that would get you all excited.
I mean, I love Morgan Fairchild, but where did she come from?
That's the best part of Twitter. It makes no sense. That's why some rando tweeted about Morgan Fairchild. Next thing you know, everyone's running with it, and she suddenly is all over Twitter. So there you go. I just thought that would bring a smile to your elderly face, but apparently not. Instead, maybe
a little bit.
Maybe these will bring a smile to your face. If the sultriness of Morgan Fairchild won't do it for you, Mr. Rock Lobster, then I do admit you are beyond all hope, sir. Instead, how about this? Talk about sultry. I found them now, these July 20s, Mr. Rock. I was kind of wondering, I was like, what went up with these? Was it a spread? Did they buy these outright? Yeah, it looks like they bought them outright, Mr. Rock Lobster, for a whopping $8. Let's see, VIX cash was around 26.5 when they started going up. And they printed a bunch of times, 3,000, 24, all for $8, 1,000. Total of 20,000 of these bad boys, Mr. Rock Lobster, for $8. July 20s for $8. Does that get you more or less excited than the sexiness of Morgan Fairchild, sir?
I'm going to stick with Morgan Fairchild, but like 1980s. What was it? Her show, Flamingo Road or something. I'm gonna go then. I'm going then. Sorry.
So no love for the July 20s, just all Morgan Fairchild. I can't fault you. Yeah, these don't get me excited. As an outright play, yeah, you got to have something else against. Let's assume this guy probably does. On the option side, I would need a pretty hefty spread. Just coming out and buy the July 20s, especially July, just knowing the seasonality of vol. That's a rough time to be long a ton of you might as well buy the December 20s at that point for that. I mean, that's about the same level of seasonality you're talking about there. So yeah, of all times to do that, I don't know. I don't love it. You like these listeners, July 20s for $8 outright 20,000 times? Does that get you excited like obviously Morgan Fairchild does for the Rock Lobster? I don't know why that amuses me so much, but it does, Mr. Rock Lobster. Let's keep on going on out here. Let's see if VXX is amusing. Coming into the start of the show, it was at about a 23 even. That puts it down about half a point. It has lost a little bit more since then. It's down about another quarter, so it's down about almost 3/4 of a point on the week. We were doing some decent paper. It was at almost 200,000 contracts a little while ago. Let's see if it has exceeded that now. Yeah, it's up to 283,000 contracts. So VXX doing some numbers out there today. It's pretty much within spitting distance, 10,000 contracts of VIX yet again. The ADV, though, has come down again. It's down to 367. It's only down 8,000. It's not down like 100,000 the way VIX is, but still. Coming in again, 367 is the ADV out there in VXX land. Let's go through the top 10. If you're wondering, it is 90-10 puts over calls in the VXX top 10 listeners. It cost you about 18,000 to break into the top 10. That gets you to the March 19 puts. Number 9, about 20K, almost exactly of the only call in the top 10, the March 35s. You like those bad boys? They get you excited like the Rock Lobster. Number 8, 23,000 of the March 16 puts here. Number 7, 23,000 as well of the March 20 puts. Number 6, 25K of the March 17 puts. Going to be pretty much a put strip here, listeners. Number 5, 27,000 of the March 15 puts. Number 4, we jump up a little bit, 34,000 of the March. These are the weeklies expiring on the 11th, 17 puts. Number 3, 45,000 of the March 18 puts, so jumping up again. Number 2, 49K of the March 17 puts. And rounding out the top 10 in VXX, the top open position right now, 50,000 almost exactly of the March 16 puts. These are expiring on the 25th, so also in the weekly. So 16 puts going a little bit farther out. Are you down with those, listeners? I know a lot of you have been on the vol fade of late. In terms of what's lighting it up out there today in VXX land, the big dog today, all pretty much expiring today except for one. We got the Feb 25th, 23 half puts going up 23,000 times today, followed by the 24 calls going up 17,000 times today. About 17,000 as well of the 23 puts. The 23 calls going up 11,000 times today. And the only non-Feb contract going up today are the March 17 puts. These are the 11th. So these are expiring in the weeklies, about 9,000 of those. Mr. Rock Lobster, anything lighting up your tape in the world of VXX this week, sir?
Well, I just, how many VXX puts went to die this week?
Last week it was rough. I mean, Putin came in and just kind of killed all the OI. It was all like a point or two away until it wasn't. And then
I know,
he killed it.
It was like, it was setting up to be like, I finally, I got decent prices for some upside. I'm like, oh, wow. Because normally one side pays for the other with the kind of vol strategy I run. So I was like, oh, wow, I'm going to finally cash ring the cash register and the puts will be worth something instead of just walking away empty handed again. And no, no. So, this week, I've got some 19 puts that are gone. I mean, I did sell some upside, but still, it's another week of just, no real action. And I was a greedy pig. I had a chance to sell them. But I figured, everything goes back to normal, but no. So, with the vol puts, at least the last couple of years, what did the Thompson boys say? You don't make any money between 16 and 20. Especially with a put position you make big bucks when VIX drops below 16. So, and it just hasn't happened yet. So you gotta be happy when it goes to 20 for a brief moment in time. Sell your puts, make your 25 cents or whatever, and wait for it to go back up again. So, I think, if anything, the narrative is still VXX is a place where puts are going to die at least for one more cycle.
the OI holders of VXX and indeed UVXY could have a class action lawsuit against Mr. Putin if such things were, if you could file them without getting radioactive poisoned.
Yes.
All right, let's go on out. Speaking of UVXY, let's get on out there now. It was at about a 16.5 when we kicked off the show. It's come down even more, down to about a 16.20 now. It puts it down about almost a full 0.8 points from this time last week. I feel your pain. I was on the UVXY side last week into this week, Mr. Lobster. And I had a chance, you're right, take off my puts as well when Vol was getting annihilated in the middle of the week there last week. I opted not to as well. And then, of course, Mr. Putin conspired to take everything away. So actually, the way Vol's eroding, those puts may have a chance again later today. We shall see. I had kind of written them off, but perhaps there's a chance for them. But yeah, about 16.20 coming into the start of this segment here. ADV actually up a little bit. It's a little bit north of 250,000, about 255. It's up about 3,000 from this time last week. And in terms of how much action on the tape today, we got a pretty decent day out there in UVXY, 241,000 contracts on the tape. Let's do a quick top five because we're coming up against it, and these positions are smaller out here. Number 5, 11,000 of the expiring today. These are all the Feb is expiring today, listeners. Feb 20s. Number 2, 11,000 as well of the Feb 14 half puts. So those 20s definitely going the way of the dodo. They had a chance until they didn't as well. You had to really be quick on the trigger finger for those. Number 3, 13,300 of the June 20 puts. Number 2, 15K of the March expiring on the 4th. These are the weeklies, 15 puts. And then number 1 out here, about 20,000 of the March 70 calls. Back to that funky upside. Today's big trades, 22,000. Looks like it's mostly Feb expiring today. 22,000 of the Feb 17 calls. Those are, hopefully you got those off in the morning because those are not looking good now. Number 2, 17, almost 18,000 of the Feb 17 halves. Again, not looking great. Number 3, the 16 halves. You had a chance at the start of the show. Not so much now, about 12,000 of those. Number 4, we got the March expiring on the 4th, 15 puts. Those are looking better. And number 5 here, we've got about 10,000 of the Feb 16 puts. So those have a chance. Fingers crossed there for you. Mr. Rock Lobster, anything catching your eye out there on UVXY this week?
You know what? Actually, I don't know if Mark actually traded any UVXY this week. One thing I was just seeing some stuff is with all the turmoil and the tumult, you would think that UVXY would be able to produce a bit more of a move than it already did. So again, because the constant stock splits really hurt this. But okay, so from the dead low of all not long ago, it was 12, and recently here like 15.85, and then it peaked at $21, right? Or we'll call it 21 and a half. So that was a pretty good move, like 16 to 22, and it's right back to where it started again. So once the futures are already so darn expensive, it's hard for UVXY to go up a lot. So unless, of course, the futures go to $90, which they haven't done today. So I think people have that kind of that memory, seared into their memory, UVXY going to the moon. But as far as volume goes, I would guess people would start looking at some 15 puts again, 14 puts. So you see that kind of 15 put action for the March 04. And right now, so that was number 2. So I could see folks looking at that for next week as a target. The March 04 15 puts for next week are 48 cents. So I can see why that could bring some buyers in for those things. That is a very reasonable put. And let's see, when VIX was last 20, UVXY traded, I believe, like a 14 or 14 and a half. So there's definitely, it has some downside room there. So yeah, looking at 14. So I could say that the 15 puts reasonable for about 43 cents. So certainly possible for VIX to get to like we used to, remember a 20 VIX used to be quite a bit still. And right now it's like 20 VIX is nothing. But, if the Putin thing, if it gets worse, we could see more vol. But, it sounds like, everybody's kind of getting together and trying to deal with the guy somehow. And then we're just, we're left with the inflation and what the Fed wants to do. So, and And right now in VIX is, again, top quartile. So I can see how the 15 put for 43 cents offers a good risk reward for leading the charge in volume.
There we go. And let's look really quickly. We didn't have a chance to get you the earnings vol reports yesterday on the option block. They kind of came in right after the show. So they are fresh and hot off the presses from our friends at Orats right now. You guys can check them out for yourselves. TheOptionsInsider.com. I don't really have time to go through all the hot names this week. We had a bunch popping off: Alibaba, Moderna, Six Flags, Lowe's, Hertz, Home Depot, Macy's, Krispy Kreme, and so on and so forth. Let's do a couple really quickly. We had Moderna on the 24th before the bell. They were at 135 3/4 when they were right going to their announcement. They're pricing in 12.4%. They delivered 14.4%, so some outperformance there. Hertz rental car vol, they were pricing in 14%. They were at about a 17.20 when they went into their announcement. They delivered 15.4%, so a little bit of outperformance there on Hertz. Six Flags, that in-person theme park business, kind of challenging right now. 43.5 is where they were trading the 24th before the bell. They were pricing in 9.2%. They delivered about half of that, 4.8%. So getting cut in half there. eBay, they were 23rd after the bell. 54.5 is where they were trading. They were pricing in 9.5%. So they're expecting some juice. They delivered a whopping $1, about 2%. So they dramatically underperformed. Let's go to Baba, 24th before the bell as well. Right around 110 is where they were trading. They're pricing in 8.4%. They delivered 1.2%, listeners. So again, apocalyptic vol underperformance. Again, these are all immediately after the announcement. If you hold these things, the frame of reference can change. You can check all this out for yourselves. The season right now hanging out at an 89%, even though week 6 looking pretty rough, only 57% for week 6. So that is dragging us down. We were about to break even, if not make some money on the season, and now we're back down to 89%, courtesy of that darned week 6. So keep an eye on that. Also, some new trades going up here. Looks like they're buying straddles and selling straddles across the board. Bought a calendar in eBay, bought a calendar in Baba. So all Beyond Meat, they sold a straddle in Beyond Meat. So all kinds of stuff. Listen, it's like they bought a calendar in Square. Get out there, check out the earnings trades reports. A lot of new stuff on there for you guys to sink your teeth into. Meanwhile, it's time for us to attempt to come to grips with the slippery pig known as volatility. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, before we get to our crystal ball, really quickly, our question of the week right now looks like it's trending in a certain direction. We asked you, how long do you think the financial fallout from this tragic events in Ukraine, how long is it going to last? Is it going to be a bit of an invasion blip or more of a longer-term insurgency kind of drag on the markets? And we gave you 4 choices: a few days, a few weeks, a few months, or a few years. And right now, a few weeks is winning with 40.5%, followed by a few days, 31%. So our audience, very optimistic, over 70% choosing the nearest duration options. Given what we're seeing in the market today, it's kind of hard to fault you. 16.7% for a few months, and a few years, 11.9%. I was feeling the cynical. I was feeling the more longer term of that, but hopefully I am woefully incorrect on that front. Let's get on out now to the land of vol. And let's see, 2 weeks in a row now, the Rock Lobster and I doing our own tilts here at the windmill. And when we kicked off the show, let's see, we were higher. Now vol actually getting a little bit of a lift again. Spikes back to a 28. Oh, I said that was our invasion. I see what we did last. Okay, that was our invasion vol. Okay, we did a range. That's right. Okay, so I was trying to see, we have a bunch of numbers for us for last week. So spikes right now at a 28. And let's see, VIX cash, let's see, still about 27.5 right now. So, I'm sorry, I read that wrong. I was at 27 double. That makes more sense. That sounded right to me. Okay, this is all written weirdly. So 27 double, which is pretty much almost exactly where we are in VIX right now. Just tick 27.52. So that gets me the bullseye winner, chicken dinner. I thought that looked wrong. And then Rock Lobster was at a 26.99. So he was actually pretty close as well, but not within our 10th of a point margin of victory there. And then we were feeling I was feeling almost a 43, 42.86 if the tanks rolled, and in 1975 if they went home and said invasion was off. Rock Lobster was at a 39.96 for that, and a 21.99 if the invasion was off. So a little closer on the upside there. And then we have again a couple of 20 options. Queen was at 28, so she is actually 0.09 away on spikes. All right, looks like Prize Patrol coming back again. Options Queen, congratulations there. Is she live? Yeah, she's live. So congratulations to Options Queen within our margin of victory as well. Oh, we had JJ also at a 28, so we had multiple 29. That's not going to do it. So we'll spend some time going through all these predictions we had from the listeners here. But it looks like we have a couple of prize winners, and Mr. Rock Lobster, a winner chicken dinner bullseye for me. What say you, sir?
How did you get a bullseye?
27 doubles, sir.
What was my? Okay, so
you were 20. You were 26.99. So you're a little over a point away on spikes, and you're about half a point away on VIX. I was less than a tenth of a point away on VIX, and about a little less than half a point away on spikes. So I was closer by any metric, sir.
Jeez Louise. All right. I'll give you credit. You did well.
I'll tell you what, since I won, I will choose, and I will allow you to go first. I will be the magnanimous person. You can make your vol prognostication as well as where folks need to go if they want to reach out to you, sir.
Yes, my vol prognostication, I am going to go for next week, 24-22.
24-22. And if folks want to reach out to you, check out the Land of the Pit. Where should they go? What should they do?
Go to optionpit.com memberships, sign up for our goodies, our Edge Hunter sheets, all of our stuff to teach you how to be a better option trader. Come on over. And if you want to learn how to fish, you come on over to Option Pit and learn how to fish. So that's what we teach you, and that's what you're going to learn. So we've had students for years and years and years, although they just like hanging out in our chat room, mostly for the the information flow and stuff like that, because we've taught them pretty much everything that we can teach them, but they still like staying around. So there you go. Option Pit.
In case you don't get that, listeners, that was a metaphor. He's not going to teach you to fish. But they will not give you a fish. They will instead teach you to fish over there in the land of Option Pit. So you can eat for a lifetime, as the man said. OptionPit.com is the place to go. You know where to go to learn more about all things spikes. MyAxeOptions.com/spikes is the place to go to learn more. Get that video that Tom and Simon just put out. It's over there about the Viking versus VVIX. By the way, I didn't do my crystal ball prognostication, so let's go out there now. Like I said, I think we're still got some vol in front of us next week, so I'm going to go a little bit higher than the Rock Lobster. I'm going to say 26, 28 for this time next week. We're getting, looks like, all kinds of 20 handles out there, 23 and change, 27 and change. Get those prognostications in if you want to be like Options Queen this week, I should say, and get a win, get a prize package heading your way. Play in our crystal ball. It costs you nothing, and you can win something fun, which is always fun. And, of course, that's going to do it for our broadcast week here for all of you folks on the on-demand side. If you're in the Secret Club listening live, don't worry. The Rock Lobster will be back in about a little less than an hour now for us to break down the world of all things unusual activity over there on Options Oddities. It's a weird week. Should be a good one. Lots of weird stuff. Lots of crazy trades going on that we're tracking. Things that we're putting on, things that we're taking off, all sorts of fun. So stay tuned for that coming up in Options Oddities. If you want to join that fun, theoptionsinsider.com/secret club. For all of you out there on the on-demand side, have a great weekend. For all of you in the Secret Club, we'll see you in a little bit later. And then, of course, back again next Friday, another episode of Volatility Views. Stay safe out there, everybody.
Volatility Views is brought to you by MyAxe, one of the fastest, most efficient trading platforms in the world. MyAxe is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, Spike, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at myaxeoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.